Hello traders, Gary Wagner here. It is 1:09 in Honolulu, 6:09 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 18th day of February, 2022, and this is the Daily Report for Gold and Silver, our weekend review. Trading in gold this week resulted in significant gains of about $38. Now, for the last 3 consecutive weeks, we have seen gold increase dramatically in price. However, today we had a very neutral change, with gold giving up $1.20 and is currently fixed at $1,980. It traded to a high of $19.05 and a low of $18.88. We did exit our trade this week with substantial profits. We, of course, will talk about that in detail, along with our forecast for next week and interim term when we pull up our charts. This first chart is a weekly candlestick chart so that we can show you the kind of move that we witnessed in gold this week. What was most interesting is that the low of the week occurred precisely at the lower level resistance line that we have been looking at for the last couple of months. And I now believe that we have gained some technical confirmation that there is a high probability that this will now become an area of support rather than resistance. This is a daily chart with the same compression triangle, and what we have illustrated in this rectangle are the 5 trading days this week. We can see that really only one day resulted in a drawdown. I believe it was a drawdown of about $12, and that, of course, was Tuesday. And the most significant gain occurred yesterday with a $30 move to the upside. Today, we had virtually equal highs, but we definitely had a consolidation because the candlestick that we have identified is a doji. We will dive deeper into the meaning of that and how it reflects the current market sentiment. Now to our current trade and our rationale for moving up our stops 3 times this week, and on the last trailing stop, which occurred yesterday, putting it extremely tight at $1,897, which in fact was hit and allowed us to pull profit on the trade. We entered the trade at $1,790. That is this area right here. We raised our stops on a number of occasions. Inevitably, midweek, it was sitting at around $18.60. However, as the situation in Russia and the Ukraine began to escalate, and then the emergence of possible diplomatic action and diplomacy, talks between the United States as well as Russia occurring next week, we felt that that created so much uncertainty that we couldn't in any way predict the outcome of next week's talks. So we raised our stop just below $1,900, and we got in at $1,790, out at $18.97 for a profit of $107 per ounce. We will go into this long 3-day weekend flat with no active trades and reestablish a position once we have a clear indication of whether or not next week's talks results in a de-escalation of the current tension between Russia and the Ukraine. Which brings us to our interim and short-term forecast, which we will explore in detail next week. First, until we get more information as to whether or not next week's talks yield any progress in de-escalating the current tensions between Russia and Ukraine, we don't feel comfortable making any concrete decisions, because obviously, if there's a de-escalation or a troop withdrawal, we will see gold correct and possibly correct hard. If it turns out that the talks result in a stalemate, then we will see gold continue to firm up, maybe consolidating or moving higher. The other aspect is we haven't really spoken about inflation. Those pressures continue to spiral out of control. But the model that we will use is the model we have been using, which is a combination of Elliott wave and Fibonacci extension. We are looking at this corrective period right here when gold traded to its record high of 2,088 down to these lows at around $1,600 plus as the conclusion of an intermediate 4, which means that I believe we've entered an intermediate 5. In terms of that, the only thing that I'm fairly confident about was that this first rally here was a wave 1. That's the subcount behind the intermediate count, and this defined and extended correction that unfolded as a compression triangle was a subcount 2. Once we broke above resistance and we had confirmation that a thrust had occurred, I believe we began a subcount 3, and that is where we'll leave it for this week, because once we have information next week, we will be able to much better calculate where we believe gold could in fact move to. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Tuesday for the next daily update and review. Bye-bye.